John, you've worked up a whole network of contacts on Bay Street and in the financial world and capital markets over your years. So what would you say the mood is right now? Give us some anecdotes and give us a sense of the concern, the fear, the optimism. How would you describe it?
I think that investors generally, and the pros, they're becoming more pessimistic now. I think it's really just sort of sinking in. You know, last week people were going, oh, it's going to be a V-based recovery and things will be better in a couple of months, maybe a quarter. And everybody's sort of pushing and elongating out the recovery process to maybe 3 months, maybe 4 months, maybe 6 months. Some people are actually saying maybe a year now. So I think investors are becoming more pessimistic, and that's really the major thing is people are really looking at this functions, not necessarily in the stock market, although it's fallen a lot, but credit markets, currency markets. There's a lot of turmoil. This is a financial crisis.
So there's some dislocation that we're seeing in the marketplace, which we can talk about another time. But let's get to what you think may be a reasonable, logical bottom for the S&P 500 of 2100. So are you waiting for one of those washout days where everybody throws in the towel and commonly known as capitulation? Are you waiting for that kind of thing? And also, based on what you're saying, it's difficult to predict, but could it be a V bottom? Is it a U bottom? Do we grind lower like we did in 0809 to a deeper low? Do you have any sense of what might happen?
There'll be two emotional bottoms. One's going to come up here fairly soon. People are looking at the sickness numbers that are starting to really spread and mushroom in places like New York City, in Toronto. There's closing down of major cities. That's having a real psychological hurt on people. The markets have fallen, a good 30% or so. I think that if you go back and look at what happened in 08, 09, you saw some really severe damage in October, November. Markets really ultimately hit their low in March. And that was really the second bottom. There's price and time in a bear market, and I think we're just sort of at a little bit of the price, but not all the price, and we probably need to spend a little bit more time working our way through it and finding out what the extent of the economic damage is going to be, and how long will that economic damage be, how much our earnings is going to fall down, how much government assistance is going to have to be provided to people. I think markets are taking heart in the fact that government is stepping into the breach here. I think what markets haven't really adjusted for yet is that even though governments are stepping into the breach, we don't know the length of time until this problem is solved.
So it's virtually impossible then to model and see through the economic impacts of COVID-19 to a place where it's safer to buy stocks, and essentially you're saying it's just too murky to predict right now.
Yeah, I mean, right now we're seeing cases accelerate. We're only just really, as we spoke the last time, we're only just really beginning to test now. People are really only getting back and starting to take this seriously. There was a lot of dallying about the seriousness of this, which we thought was a mistake. I think that investors are really only now getting caught up. It's hard to model these things. I think it's reasonable to expect that it's going to come to an end, but investors are still optimistic, and we're just not there from a sentiment perspective yet.
You're now holding 26% cash for your clients. Just curious, as a matter of course, what's the other 74% made up of in a general sense?
We own businesses that are strong, durable franchises that people touch every day. So financial services, which is obviously taking a hit right now. But the banks went into this crisis in very good shape. Governments have learned their lesson about allowing the financial stocks to get out of hand here. We own some consumer names like McDonald's, for example. Obviously, they're taking a hit, but financially, they're strong. So we really try to do is we want to own companies that have strong balance sheets, good, strong franchises, thoughtful management teams that are really investing in the future, not just always doing stock buybacks and leveraging up their balance sheets.
And are you nibbling away at anything, any stock, or are you still waiting?
In January, we built a spreadsheet. We took earnings down by 10, 15, and 20% and said, where will we buy these stocks? So we are in those buy zones, and in most cases, we just think that time needs to be had here. And so that's why we're really actually pretty excited. Obviously, we're concerned, and we're not insensitive to the major dislocations that families are going through, but we're excited because we think we're going to get even better bargains.
Now, for investors, John, you think there's one question that they should ask themselves. What is that?
Yeah, I think it's a great question for investors to think about, and that's really, if you were to be told that they were going to close the stock market tomorrow, they gave you a day's worth of warning, what would you do? Would you buy? Would you sell? Or would you do nothing? And I think, in our case, the businesses that we own, we know are going to function just fine in the aftermath of this. And the markets, by the way, aren't going to open up until it's all okay. So if you have a bunch of cash, and they might close the markets for a month, I'm just picking a number, or maybe 2 months, would you buy, sell, or hold? And I would be a buyer because we want to own good quality businesses. They are on sale. There is concern. There is panic to some extent. I think there'll be more panic yet. And we want to make sure that we don't get overly greedy on the downside. We want to be invested in good quality companies. So it's good to be greedy, but not too greedy. But if you answer the question, I would be a seller, then you have to ask yourself, why is that? Do you not have enough cash? Were you overcommitted to equities in the first place? And those are the kind of questions that we try to have with our clients before these kind of things happen. You need to be anticipating that things aren't always just good. And we don't question ourselves when times are good. We question ourselves when times are bad. And that's a dangerous situation to find yourself in.
And remind us and remind everyone how they can get a hold of Davis Ray, and if they also want to sign up for the newsletter.
Yeah, Davis Ray, DavisRea.com. And you can send us an email from there, and be happy to sign you up for our newsletter and our blogs and our videos in the future. Thanks, Mark.
Sounds good. Thank you.
Thank you.